Welcome to the Gary Abbott YouTube channel. Today, it's kind of like my annual budget, taxes, what you need to know. I've done a number of budget ones. I think my most viewed video of 2025 was the big beautiful bill, the tax changes for those in the retirement age under the new Trump big beautiful bill. Whether you like it or not, we did get an extra for couples, married couples, an extra $12,000 deduction. So today I'm going to take my budget videos, update the budget. I'm actually going to fill in the estimated tax portion. I'm going to show you how the new taxes work and what you would budget under a fake scenario that I'm put together. So bear with me, this is a two-part. It's the personal budget that I will link the previous video where you can cut and paste the categories into an Excel. I do no longer email it out, and this is kind of an updated version, but you need to put in your own numbers. Again, this is not my numbers. It's kind of fictitious to give you a little bit of how it works, but not completely. And when we get to estimating the taxes, I'm going to use the AARP estimated tax calculator. You have to be a member of AARP in order to use that calculator. I've tried others. I tried the free one on IRS. I've tried others. They don't come close. I can't find one that comes close to the AARP, and I'll explain that when we get there. So buckle up. I'm going to fire up my computer, and we're going to walk through first the budget. So let me do that. Okay, so here I have it up. I'm going to put it up on the screen, and this is my categories, but I'm going to go into more detail under the income because it relates later to putting in estimated taxes. Some of you will be higher, some will be lower, but this is just to give you an idea of how this works and the kind of funds you probably need to be having on income to afford in the villages. But you can go different ways, and this is just an estimate. So let's start off. Social Security. You have yours and your spouse's, and you can see I put in $2,100 a month, which turns into $25,200 for 12 months for a year. So that turns into $50,400 for the two. Retirement funds. I'm assuming here a 401k or an IRA that's pre-tax, and you want to take out another $1,000 a month. For the both of you, $12,000, not $24,000, but just $1,000. Interest income. I'm going to assume you have some cash and you put it in CDs, or you put it in a really good savings account that gets you good interest. And I'm assuming you get $100 interest a month, $1,200. Could get more, could get less. I'm actually throwing in you either have a pension or some other income, and I'm taking that at $1,000. Now, some of you won't have one or two of these, and then I'm even throwing in you got a part-time job making you $400 a month, which turns into $4,800 a year. So, in total, you have available to you about $6,700 a month, or $80,400 for the year. That's how this spreadsheet works. You're not doing anything for savings or emergency funds. I take it if you have an emergency, you're going to take it out of your IRA or 401k or savings or someplace that you have a plan. I don't know why I picked this number. It was in here before. Mortgage. I don't even know what this equates to, but I had 1,558 and 83. I must have had some philosophy under another video. So I'm saying you're willing to put up a mortgage of about $18,705. It would depend if you put half down on the house or you put 25%, whatever that number is. Now I did up some numbers like electricity. I upped phone, cable, internet. I didn't actually up phone because I'm going to tell you I go through Visible, which is Verizon, but I pay like $500 a year versus $1,200 that I have in here. Great program. You could be saving money elsewhere. That's why you need to fill this out for your own. The big one here is property taxes and the bond. Now, I have $825 that you would set aside per month to give you $9,900. And I'm gonna tell you how I just came up with this. I'm gonna say your house you're paying $6,000. I looked up a bond, and I'll put it up on the screen, and the bond is going to end up being almost $3,000. So you're looking at $9,000 or so for both property taxes that's going to go up every year, and you're going to pay that flat rate bond of $2,900 if that's what your bond was. If your bond is in one of the newer, higher price locations, it's a $50,000 bond, you're going to pay more than the $2,900. You're going to be over $3,000. So I put in, and you would end up paying about $9,900 a year for property taxes and bond. Now, this is all dependent on the house you buy, the price you buy. It could be low for you. It could be high for you. You need to fill in those numbers. Pest control, lawn service, those kind of things. I budgeted $150 a month. Could be more, could be less. IRS taxes. I plugged in $103 per month that you need to pre-plan for taxes for the upcoming year because of your Social Security income and then your income from things like the 401k. They're taxable. So you need to prepay, you need to do an estimated tax or have taxes withheld from your Social Security up front. You need to do that, or you need to pay estimated taxes. And the government, one of the big things I learned in retirement is the government looks at, you can't pay it all in December. They're gonna give you a penalty because you didn't pay it evenly over the whole year as you collected money over the whole year. So you will get taxed through either you'll do a penalty sheet on your software, and this is a big change from working your whole life to collecting Social Security and getting other income from your other savings that you didn't really anticipate. That's going to give you $1,236, and we'll see how that comes out when I show you the estimated taxes. I'm assuming you bought your cars outright, but you still have auto insurance, fuel each month, registration, licenses. Could be high, could be low. Depends on your vehicles, number of vehicles, all of those questions. Threw something in here just to give you some help. Another area that's totally based on your consumption of groceries, dining out, clothing, getting your hair done, all of those things. I put in some estimates here. Whether you agree with these under the daily living of about $1,470 a month, this is not your utilities. Living day to day. Entertainment, I still put in whether you go out to the movies, whether you go to concerts or plays, whether you pay money for sports, golf cart maintenance, that kind of thing, may be a little high, but there's a lot of things in here that I just threw in for entertainment. Maybe you don't spend $365 a month, but you might be surprised how much you do spend. Health insurance, I didn't really adjust this too much. If you have Plan G, Plan N, you're paying a monthly fee. And then on top of it, you're paying for Part B. It's $350 to $400 a person. You're a couple. It's probably $750 to $800. Then I put in a gym membership, saving money for the dentist. Prescriptions, maybe high, maybe low, 125 equals about $1,500 for the two of you. I can tell you some of us, we look at under Plan D that you have a max of $2,100, and some of us reach the max alone. So this number could be low, could be high, but take that in. And then I didn't allow anything for you to go on vacation, buy souvenirs, pets, rental of a car. I didn't put any of that stuff in. But when you look at this, what I want you to look at is the total of what you're going to spend is $6,571.83. Probably should have rounded that mortgage number, but it's going to cost you about $79,000 a year. So how does that match up? Let's scroll up to my income summary. The income that I put in here is $80,400. We're spending $78,000. It's close. It's got a margin of error of about $1,500 for the whole year. That's like $100 each month. If this is your budget, that's what you can deviate from. Now, doesn't mean you can't take out more from your 401k or work a job that has more hours, or maybe you get a lot more in Social Security than what's in here. So there's those numbers. We're going to use these income numbers now in the AARP estimated taxes. So you can see how I do that and what you would pay in taxes based on this income. Now, the estimated tax AARP is 2025. I'm sure there'll be an updated one for 2026. Let's turn it over to those items that are in the AARP tax calculator. Okay, so I have logged into, and actually I noticed you might be able to use this without being a member. Not sure totally, because right now it doesn't have me logged in. I was able to punch in some stuff. But here we go, the AARP 1040 tax calculator. This is for 2025. They didn't update it till the end of the year, which is too late to estimate your taxes at the beginning of the year. Hopefully they come out with a 2026 one before your estimated taxes are due, I think April 15th. So I would hope in March there would be a 2026 one that you could plug these numbers in. But I'm using the 2025 one because the tax bill that was passed by Trump back in July by the Congress, almost everything's going to stay the same except max limits maybe. The same deductions and the same standard deductions will all be in here. So let's go through it. The first thing I did is you go in and do your filing status. So I'm doing this totally based on a married filing joint couple, and no dependents, no anything else. As you remember, in the income, we had estimated earning like $400 a month in a part-time job. So I put in wages and salaries here of $4,800 for the year. Next, taxable interest. I had said you were going to get $100 from your CDs or savings that you have, and you earned like $1,200 in a year. So I plugged that number in here. There's a lot of other numbers, but I did two new numbers that are based on those incomes that we did. Out of your IRA, if you had an IRA, you would use the $12,000 for the $1,000 a month you would get. If you had a pension that I used in the chart of income, turns into $12,000 for the year as a pension. Now, if it's a 401k, it still goes in this same slot. Believe it or not, both the IRA, 401k, and pensions work the same. because most of it's taxable unless you have a unique situation where it was not pre-tax, and then it won't be, you'll get a statement that has a different number. There are many other items in here if you run a business or a Schedule C that you use, but we're trying to make this simple. Those are the things we had in income. This is the big one. This is the benefit of this over the IRS one or your tax. I do H&R Block tax, electronic taxes. It told me higher than this software did. I did this software, and if you go back to that old video, I faked the new increase in standard deductions back in July to show you the effect. And it was a big effect. It reduced people's taxes by $1,000, $2,000. Here, goes into the formula of how much Social Security is taxable. So let's take a look at this. For the example I gave, if you add up those husband and wife, Social Security benefits over the whole year equal $50,400. But it shows here that taxable is only $15,000. Now, if you earn more in all those other categories, or you earn more in Social Security, this will show you, it'll calculate. Let's just for kicks, I'm going to do it right here. I'm going to go into the number. I'm going to make it, you earned $80,000 together. Look what happened. Your taxable went to $28,000. $28,000 taxable. It jumped a lot. So let's go back to the correct number. 50,400. That's like half. Okay, so I went back. $50,400 is the correct number in Social Security. So you take your standard deductions. Now I'm going to right here not check off your 65 or 65 or older. This is where the new $6,000 per person extra deduction is for those over 65. Doesn't relate to whether you're on Social Security or not. It only relates to whether you're over 65. So you in the villages that are under 65 don't get this, but I want to show you how it plugs in the standard deduction and it comes up with your total tax before any credits. And credits would be the amount deducted or withheld from your Social Security for federal income tax purposes, or whether from wages. And you can see here it would be $1,403. Based on all this, your taxable income is $14,020. That's pretty good. Out of $80,000, you're only being taxed on this. I had put in, over the whole year of that part-time job of $400 a month, you only put in $10 withholding each month. Gives you $120. But you can see this is where $120 would lower that $1,403. So when you come down to the bottom, it tells you out of all your total income, and it's saying your total income is $45,520, but that's after the deductions. You've gotten $40,000 in deductions. Well, maybe not that much. You got 31, it actually says 31.5. We just went with the standard deduction. So 31 lowers it, you get down to 45. Your taxable income. I love this little paragraph here. So you're paying 3.808% of your income. So 3.8 of 45 equals 1,403, right? Not a very big amount. And then you had $120, so the taxes you would need to do estimated taxes would be $1,283 through the whole year. So you would divide that by 4 and pay it. It says you're in the 10% bracket. And this is where it gets, I'm always confused about how, because the taxes are graduated. You pay less tax, you pay 0, then you're up to 10, then up to 20, and then 22 or 21. We'll see. But what I want to show as an example is I'm going to go, you want that extra tax deductions. You're over 65 and your spouse is over 65. With that extra deductions, look what happened in the chart. No income tax, no taxable. So the $1,400, because you're over 65, this person, this would save $1,400 compared to being under 65 and not getting that a new benefit. Now let me explain how this works here, because now it says 0 of the 45 you were charged taxes and you're in the 0 bracket. This is the next 4 years, in maybe 3 years, if you want to take more money out of your 401k or IRA and be charged at a lower tax rate than when the taxes go back up, or if you're planning on taking a bigger chunk, for example, I want to take and buy a pool. It's $100,000. I want to go get a pool. And I said, okay, I'm going to take that $100,000 out of my IRA. It's plenty of money in there. I'm going to take it out. Well, if you add $100,000, let's just show what it does here. So I go up to my IRA, and instead of 12, I'm going to take 112. Let's go back down to the chart now. I'm going to pay $18,000 in taxes, but the rate I'm paying is 10.52. Now, whenever you do this, you better be looking at your total income. You don't want to go over those magic numbers that increase your Medicare Part B limits, because if you do, those numbers skyrocket from, whatever you're paying of $204 or $5 to you could be paying $300-400. So you've got to have either a tax planner or know what those limits are. Extra $6,000 per person. I believe once you go over $175,000, it gets reduced. So you don't get the full $12,000. It's graduated and you end up losing it. So you only get the extra 12 if you're within a certain number. But you may say, okay, I am okay that I'm going to pay taxes of $18,000 to have that money and it no longer be pre-tax. So you're almost paying 20%. Is it worth it or not? A tax advisor would be best, but this would give you a heads up. That's where this comes in and helpful in planning, if you decide to plan. But this is something that if you don't feel comfortable that you know this well enough, I recommend you talk to a tax advisor. It's a great tool. Like many other things, it's a good tool. The other programs, the IRS one, always had me at about double of what my income tax would be. Now again, there'll be a new calculator for 2026. AARP is pretty inexpensive to join. I think it's like $8 a year. Just for this alone. It looks like you can use it for free. I'm not guaranteeing it. I think if you want to keep your numbers, you need to log in and it remembers your info that you put in so you can keep it. You can print it and have it as a record of how you determined what you were going to pay for estimated taxes. I hope you like this video. It is a long one. I really tried to condense this as much as possible. I'm going to give you a link to the AARP calculator. I'm going to give you a link to the last budget YouTube video that will show you in the description on your computer or on your iPad shade, cut and paste, and put it in an Excel or numbers program. If you're a Mac person, you can put those in and you can do your own numbers. You can at least make a budget, get an idea of what you're looking at. There's a lot of things I put in here that weren't in the past, so I feel it's more updated. I put a little bit more in the automobile, but you need to tailor it to your scenario. I tailored it to mine last July, once I knew what was included in the tax the tax new standard deductions. I plugged it in. My taxes are turning out to be exactly what I had planned back in July. Exactly. I'm planning this year for what I'm going to pay next year. But I also want to know the impact of, am I financially planning well enough to pull out some pre-tax dollars ahead of time? This made me start looking at it. Maybe something you want to look at. Two tools that I use, and I've been using them every year for the last 2 or 3 years. And I'm going to tell you what I learned from not being retired to retired. You have to do this. You need to play the game. Otherwise, those first 1 or 2 years as you retire, then your wife retires, and you hadn't been putting taxes away, you're going to get hit with penalties. And trust me, I just recently, I retired last year. I got hit with a penalty. You can, as you go into retirement, they do give you a form that you can dispute the penalty that you weren't aware. But that's only going to be for that first time that you went, oh crap, what happened? That is available. If you'd like me to do a YouTube video on that, I did get my entire tax waived, the penalty portion of that year, using their criteria. They have a whole standard and everything fit me like a T. But I couldn't use it the next year because they're going to go, you know the reg and you already filed for this. So I have to definitely plan it out so I'm prepared. I hope this is helpful. This is definitely not about the fun times in villages. It's a budget, IRS, planning for your future taxes and how the taxes work. Thanks for watching. Like and subscribe. And I only did this video because so many of you that came up to me said, I really like your budget videos. So I went even further from what I've learned, budgeting to move there to budgeting after I'm retired and living there. Thanks for watching.